Hey, what's up, guys? Sam here, and I'll be doing the premium video for OpX June 2025. So I'm getting this one out about 2 hours or so before the market closes. Been a little bit of a slow day, a little bit of a chopper, a little up action, a little down action, flattish on the day basically. And if you've been watching these Friday videos that I do with you guys, both in the room, in the simpler trading room, as well as on YouTube, you will note that not really anything has changed or developed on the time frames that we're looking at in front of us, meaning that the weekly and the daily charts have been basically the same for weeks at this point. In fact, I would argue that they've been the same since the middle of April to the beginning of May based on these signals. So as we sit here, I'm looking to see if this would, do something different, but it's not. I would look to see if there's an arrow that's going to trigger, but there hasn't been. Same thing on the weekly. And then of course this guy never crossed, so that's a tiny bit of an issue, but as long as this says no trend, remember what we do, we just rely on the lower indicator to tell us what to do. So that is still fully aligned for the upside. The one thing that has changed is, as opposed to all of these trading days back here that were very small and very tight and, well, I think those are decent enough words to describe them. Today we actually came down and kissed the top of the cloud, which is the daily 21 EMA. And that is kind of a big deal. And the reason that's a big deal is because the score here, it being a strong bull, implies that this should hold. It implies that it should hold exactly where it is, because a strong bull score says you definitely buy the 21. Doesn't mean it works every time, but that is what the indicator would tell you. And basically the 21 on SPY is the low of the day so far, within a few pennies. So aside from that, not really much has changed here. If we analyze the weekly chart, then you do have a little bit of a continuation of an inside week. These are, again, very small ranges here, so I kind of feel like you could just go back and watch last Friday's video and get the exact same information. We'll see if we find anything new as we go along in this video, but so far, these have been your last 2 weeks, and there ain't really much there. If you get a break below this week's low, that starts to trigger a much larger down move. If you get a break above last week's high, that then triggers, of course, a move directly and above the all-time high. But as we sit, we don't really have all that much information on this time frame. If we go to the QQQ and do the same work, we're going to get the exact same results. Surprising, I know. And that is very tight inside range candles that are not really offering all that much in terms of new information week to week. So the only thing you can really do when we have tight action like this that is not really giving us anything new to bite into is just say, okay, well, inside week, there's no trigger because you're not closing below last week's low and you're not closing above last week's high. So that's basically the way I'm looking at it is, are you closing above the weekly high, which would trigger a new wave up? Are you triggering below last week's low, which would trigger a new wave down? And the answer to both of those questions, again, with this overwhelmingly exciting candle, is you're not. So same thing here on the Qs. This one's a little stronger. This one actually did not even have to come down to its 21. That just goes to show you where you want to be focused in this market. This is a very tech-heavy market. It's a very momentum-based market. And I would 100% continue to focus on tech more than anything else because that's all anyone wants to buy. Let's check out the ever lovable Russell. So again, more inside stuff, nothing here that's definitive. The boundaries have been set, but neither boundary has been broken to the upside or to the downside. So the boundaries here, as I have it, I have 208 and I have 215, basically. 215 is the top of the range, which is the daily 200, which is basically exactly where you failed. I have a major Fibonacci here at 208, and you're just chopping away. Nothing to see there either. Now, I do promise you that one of these weeks, when we do these Friday videos, we will have something new to talk about, but not to my surprise, this may not be the week for that. But let's keep plugging away and see if we find anything that might be informing us of something new. So maybe this, a little bit, just a little bit. HYG here is improved from last week. I do remember the scores being lower than this, so this is an improvement certainly. This bodes well for bulls. This is a discrete signal that this leans certainly bullish. I would say that as long as it's above 78, it leans bullish, and it's well above that. I would say that if it gets above 80, it gets very bullish, and it's just a stone's throw away from that. So this is a very constructive pattern, and I think this is, assuming that we view the indexes as not having made any ground this week for either side. Neither side won this week. They almost didn't even look like they showed up. I would say that HYG tips the scales towards the bull side. Now, the scales were already tipped towards the bull side because of the daily scores that we saw. The SPY and the Qs were both strong bulls. So that basically just adds additional weight of the bullish undertones when we look at something like HYG here trading right under 80. And this definitely is a notable signal that the bulls are making some progress. I don't look at TLT very often, but I was asked to review this by someone in the room, so I will look at it. And what I will tell you on TLT is it's actually doing everything that you would expect. I had told you guys that I had been looking for a low. I was looking for a low basically exactly where it made a low. Now, I think folks that are in this, either in the room or wherever else, they're probably looking for something that's like actually going to start moving. But this is not an instrument that is really dynamic, right? So I told you that I thought that candle there was a low. That was like 3 weeks ago now that I told you I thought that was the low. We looked at it with ZB, not TLT. It's more obvious on ZB. And so far, what is it doing? Well, it is holding the low, right? This candle is still the low, and it's kind of just trapped inside this box. And so really there's not a lot to read here. The score itself is just neutral, which is actually an improvement from where it was. You're starting to get a little bit of a positive cross here. And if you look at it on an hourly chart, it's ugly, it's noisy, it's not blowing your hair back, but it is very, very slowly becoming constructive. Would I ever put money here? No. Personally, no. I don't think this is a place to have money. Not when you have literally all of the momentum stocks just going crazy. I think that if you're trading, especially if you're newer, especially if you're a small trader, your advantage comes from your speed and your ability to take advantage of other traders who are making poor decisions. And a lot of those traders that are making poor decisions, impulsive decisions, are typically going to be found in the fast-moving stocks, right? They're going to be found in the Circles of the world and the Coinbases and all of the Mag 7 stocks, the semiconductors, things like that. You really won't find a lot of retail, let's call them silly gooses, silly geese, silly gooses, whichever one's the right one. You won't find a lot of them in TLT. So here you're playing against professionals in a instrument that it doesn't move, that isn't moving. It's slowly, glacially becoming constructive. But if I had $1, I wouldn't even look here. I would look 100% in the tech sector and then just follow the momentum and just have a plan for when it ends. So let's move on to the volatility products, because there might be some interesting things hiding there. So it is a Friday, so it is, of course, tradition that the VIX would get smacked. Friday smack VIX is a thing. And here you're kind of doing nothing, right? It just continues to do nothing. And I think a lot of times when folks see this, this is when they get the most complacent, and this is actually when it's the most dangerous. So is this enough of a signal to say that this is a signal at all? No, it's not. It's actually a non-signal. You have neutral down here, which is almost nothing, and here you're completely neutral, which is almost nothing. You can see the weekly candles here. You know, you've gone in this tight range, very tight range here. You can see it for yourself, just between somewhere around between 17 and let's call it 22. But when it starts to get really compressed like this, and you're going into a squeeze, that can actually be the most dangerous time. Meaning that everybody gets really, really complacent in these moments, and then you can get a big move up like that. I'm not saying that's what happens here because I don't have any evidence to support that. I think that if you're bullish here, the number I would give you is about 18.5, where you need to get back below 18.5 in order to fully squash this thing, as right now it does have the potential to do something next week, but it doesn't actually have any alignment quite just yet. So this is just 100% a push. I don't see any edge here on either side. Based on the volatility product, let's go to the VVIX. The VVIX being up today while the VIX is down is a little bit of an issue. This one certainly looks a lot more constructive. Getting more arrows. The weekly is getting relatively bullish. Daily's completely neutral. It's not enough quite just yet to even call this a signal, though. I'm not seeing it quite just yet. Yes, I do understand that the VVIX will move before the VIX, so this can often be kind of a precursor to the VIX moving at some point, and it often is. But as of right now, I'm not seeing any major issues here either. So going into next week, the main thing that I'm seeing here, I'll just kind of ruin the surprise. Here's what I'm seeing. And this is kind of the big payoff. And a lot of this is also a little awkward to cover because, you know, I do one video with you guys a week. It's on Fridays, which is, you know, a privilege certainly, because I would say the Friday video is probably the most important one of the week. So it is certainly a privilege to be with you, whether you watch it on Simpler or you're watching it on the YouTube next to a cat video. But there's not much happening here, right? And so we kind of just have to look between the lines and say, okay, well, what does this look like? What does that look like? And I would say really the next big signal is probably this one. And you could find it on the Qs if you prefer. I prefer the Qs just because, again, this is where the leadership is. But if you want to use SPY, it's basically the same signal. So right now what I'm seeing is a neutral chart with some thrust that is aligned with multiple arrows to the downside, and a squeeze that has a little bit of a downward bias to it. So going into next week, I am going to be short some SPY. I posted that trade in the room, picked up the John trade, which he did the 590 puts on SPY for July monthly. I put a spin on that trade. I think what did I do? I did, so he did the 590s. I did the 595, 580 put debit spread for the quarterly expiration. So same idea, but he went with a straight put with more time. I went with a vertical, put debit vertical, 595, 580 for the quarterly expiration with less time. So that's how I'm looking to play it. I'm going to call myself wrong on this trade if SPY closes above 598 is my breaking point on SPY. So I'm wrong below there. And yeah, that's how I'm going to play it. Again, these are very minimal signals. I think a lot of this, you know, just based on the last couple of weeks, especially with global political events and whatnot, it really just comes down to the vibes, because when you have neutral charts like this, just the weekend vibes will determine what direction this goes. To me, you know, I'm looking at this more as a kind of a rounding potential top here with the squeeze of the downward bias and my arrows. It would be a much stronger signal if these two lines were negatively crossed, but they're not. So the trade could just be a bust next week, but that was the trade that I was willing to put on for the weekend, was to be short the SPY via those trades that I just told you about. There are some good setups out there. You know, one of the best ones that I'm seeing in a big stock is Netflix. So, you know, if next week it turns out to just be bullish right off the gate, then I would look at something like Netflix. I would continue to look at things in the Mag 7. I would continue to look at things like Dell, that has a very nice daily pattern. Basically, everything that's been working, I would continue to look for that. So it's very binary at this point. Going into next week, if the market is good, I want to be long tech and more tech and momentum tech, and I want to chase things up 4, 5, 3, 4, 5, 10 ATRs. I say that half jokingly. And if the market's not bullish, then of course I just want to be, either on the sidelines waiting for a better entry, which might be the best play here, to be honest, is just if you don't love this spot here, if you're not getting the price you want for what you're looking to buy, then just leaving a fishing lure in the water and just waiting for price to come to you makes a lot of sense as well. So that's the way I'm looking at it. It's a lot of words that I used just now to tell you that the market is neutral and that the weekend vibes are going to be the determining factor on what way this 4-hour squeeze breaks. But I would certainly point you in the direction of the 4-hour squeeze as a predominant signal that will determine the next week. Understand that if we close below last week's low, that triggers, in my opinion, a bigger flush. If we close above last week's high, that then triggers a move well above the all-time highs in the market. And right now we just continue to have inside action that is neutral from the inside out as well. So that is where I'll wrap it. Hope all of this was helpful to you guys. If you're on the YouTube, actually, you know what? I just remembered. I told myself I would do this, and I probably should remember. So I asked you guys on the YouTube, and for those of you watching on Simpler, if you do have questions, pop over to YouTube and drop us a comment, because I'll start doing it this way, which is just taking a screenshot of the comments and seeing if I can answer any of these questions, just doing it live in the video. So somebody asked here about Piton. I had talked about Piton about 3 weeks ago, maybe 4 weeks ago. I got out of that 2 weeks ago at 775. I'll just pull up the chart really quick. I didn't like the action on it. It's not behaving the way that a lot of the other high momentum stocks are behaving. You have things like HIMS, HIMS, which are perfectly aligned and have even higher short interest than something like Piton, while Piton is basically just a chop fest. And the thing is, Piton is also in the Russell, and just no one really showed up to this party, right? So I had been looking for Piton, where was it? I got it here on that day. I saw a nice move up, then I gave it all back. I stayed in it. I got out of it on the test of 775, which was right there at the previous high, and I said goodbye Piton, never again. So I will no longer bring you under $10 stocks of companies that are probably going to go bankrupt in a year. If you are looking for something similar to Piton with a significantly better business model, higher short interest, and a good quality chart, then I would point you in this direction, and I would point you towards HIMS. Now, of course, you do want to wait for some level of a discount buy on this, because this is not a discount, but this is where I would kind of look to be playing. You have a perfect squeeze, and you have a perfect score, and you have 30% short interest. That's a setup. Do I still see a looming threat of a monetary system causing a lower low at some point? So that one's a tougher one. That one's more of a bigger picture question. I think the pieces are all still there. I don't see much that has changed, but from a technical perspective, I'm not seeing it in this moment. I would need to see some significant break signals on the daily chart, which we're not even close to seeing. We're actually within a stone's throw of an all-time high. You're seeing improvement in things like HYG, which if that view was going to be correct, HYG would be a canary in the coal mine and show you that it's just not going to work. Meaning that if HYG is going lower, or excuse me, if HYG is going higher, the market sees nothing to be worried about. So I don't have a signal in HYG, which is a primary signal. The market seems to not care at all about interest rates. If anything, HYG is going up with higher rates, which is a very bullish signal. I don't have any contrarian signals in the indexes. So right now, the euphoria is certainly running high. I would say that that's evident in the put-call ratio. I would say that that's evident in many of the high momentum stocks that are going up 20, 30% a day. And of course, those things always end poorly. Now, is that enough for me to call that a signal? No, I would need to see more signal alignment. So for now, I'm shelving the idea, but I actually do still think that we see it probably within the next year, maybe less. And then lastly, the first question, which is I'd like to see a breakdown of how you position size and scale in and out of trades. So really, I'll just answer this one kind of briefly and broadly. I think that if you're looking for how to position size, I think you just have to ask yourself what percent of your account are you willing to risk per trade, right? So let's say you have a $100,000 account. Your typical risk parameters will be somewhere between 2 to 5%. So on a $100,000 account, you'd be risking about $2,000 to $5,000 per trade, and then you would go from there, right? If you're going to be risking $5,000, I typically like to get my position in thirds. So what I would be doing there is probably something like $1,700 per order, right? 17, 17, 17 gets you pretty close to 5,000. But whatever your number is, right? Even if you have $1,000 account or whatever, $1 million account, you just scale the numbers. That's the beauty of percentages. So I would just say that in general, if you're following good practice that is mathematically sound, 2 to 5% of your account, I think, is a common way to do it. Of course, feel free to scale that up or down as you see fit. Not everybody's risk tolerance is the same. There's oftentimes I'll do 10%. But that's number one, figure out what your percent allocation is. And then 2, consider scaling in thirds. So buy a third of your position, ideally buy the next third on the way up, and then buy the last third on the way up as well. So that's how I like to do it. All right, guys. Well, that is my time. So again, if you are watching on the YouTube, leave us a like, leave us a comment. We'll come back next week. We'll start doing this as a daily or a weekly thing where we actually answer the questions live, which I think is more helpful than not. If you're watching me on the Simpler Trading website and you want a question answered, you can always just shoot me an email, sam@simplertrading.com, or if you want to help us out with the algorithm on YouTube, drop us a comment there. And again, I'll come back next week and we'll figure out this chop fest of a market together. All right, guys, that is my time. Thanks as always. Drop us a like, drop us a comment, and I hope you have a great weekend. And I'll see you guys back in the room on Monday. Cheers.